through the Safal Niveshak platform, I've always talked about the importance of reading about companies you invest in, because by buying a stock, you are not just buying a worthless piece of paper, but you are buying a stake in a company, a running business, however small that stake might be. Anyways, to bring about the importance of reading annual reports and how can you analyze a company by reading its annual report, I am starting a video series on this subject. To start with, let us run through an annual report and see what are the sections that are important for you to read as an investor and what amazing ideas you can get from the same. So let's start with the annual report of Hindustan Unilever Limited, and I'll take you through the latest annual report, which is the 2011-2012 annual report of the company. As the name suggests, an annual report reports the annual performance of the company in the year gone by, the financial performance, the overall business performance, and how the company and the sector has done, and what the management thinks about the past performance, and also sometimes about the vision for the future. So let's go through, run through the annual report of Hindustan Unilever Limited. As I see the contents, you'll get a fair idea about what are the different sections which are present in this annual report. The most important sections, of course, are some of them you don't need to read the entire annual report. There's some important sections that you must not miss. For example, in the contents, I can straight away see that there are some sections under the financial statements. And as you know, financial statements are the language which companies use to communicate with investors and outside world. So you must not miss reading out the financial statements. This is one of the most important section in an annual report. Then you have the chairman's letter, which is also very important because it gives a perspective of what the guy who's leading the company thinks about the business and about his future vision for the company. And you have other sections like the financial highlights, which will give you in a snapshot the performance of the company. So you can see the different products of the company, and you would not know about these products until unless you read an annual report of a company like HUL. Here's a chart, for example, which gives you a snapshot of what are the different products and how much do they contribute to HUL's business. For example, you can see that soaps and detergents form around 48% of the company's total sales. As a consumer, you might not know that, but as an investor, this is a very important number for you to know that, because this is where the company's focus lies. Soaps and detergents and personal products, for example, they together contribute around 79-80% of the company's total, 90% of the, in fact, company's total business. So these are very important numbers that you can get only when you read the annual report. We talk about breakup of sales. For example, HUL has also given the breakup of revenue expenses. So here you can know that around 60% of the company's total expenses only raw material expenses. So that gives you a sense that whenever, for example, the cost of palm oil rises, which is a very important raw material for HUL, and you will know about it when you read the annual report. What is the impact on company, whether it's able to pass on the cost to consumers or not. So you'll get to know all these things only when you read an annual report. So here is a page which talks about a snapshot, gives a snapshot of the company's past 10 years of performance. And as an investor, this is an amazing page for you, because in a 5 minutes time you can really know how a company has done over the past so many years. You can see HUL's sales, for example, being stable and then growing and then declining over the past so many years. You can see its profits largely flat, then really falling by around 40% in 2004. So you can go back to 2004's annual report and see what happened. And again in 2009-10, the profit falling over the previous year and remaining stagnant and then rising. So these are the different indications that the company's annual report will give you in a snapshot. And this is a very important table. Of course, you should go and read detailed financial statements, which we'll come to very shortly. But these tables give a very good snapshot of the past 10 years performance. This, for example, table gives you a snapshot of the company's balance sheet. And as you see, for example, a very important figure, which is the loan funds, which is a debt on the books, the amount the company borrows from banks, and you see there's zero debt 2019 onwards, which means HUL has become a debt-free company, which is a very positive number for any company to have. This table, for example, gives you a snapshot of the different segment and how much they have contributed to sales in the past 10 years. So again, a very ready reckoner of the company in a snapshot. And then you have the key ratios, very important numbers: EBITDA as percent of sales, which is like profit before interest and tax, and how much has it been as a percent of sales. We'll of course discuss these numbers as we go on into the series, but I'm just talking about them because we are seeing the table of HUL and what are the kind of brilliant ideas that you can get by just reading the annual report, by just glancing through the annual report. So these are the charts again, which talk about the last 10 years performance, the segment wise sales, the earnings and dividend per share. Now for example, this chart on earnings and dividend per share will tell you that while earnings per share have been growing in the past 4 years, the dividends have come down. So you need to really find out the reason why is the company paying lesser dividends despite the fact that the profits are growing. It might be the case that the company is expanding a lot, spending a lot on advertising and marketing. That's the reason it has less money to pay as dividends. But this graph, for example, gives you a very important, a very quick snapshot of what's the case. Here's the chairman's letter. As I said, a very important portion of an annual report. So you know who's the guy, who's the man or a woman leading the company, whose stock you own, because ultimately a stock is not just a piece of paper; it's an ownership in a business. I hope you understand that. So for you as an investor, this is a very important page or section on annual report where the chairman talks about his views on the company, the performance in the past, and you can see the chairman's photograph. Uh, he's Harish Manwani. As a consumer, you might not know who's the chairman or who's the guy leading the company, but as an investor, it's very important for you to know the credentials of the people who are leading the company, because management plays a very important role in a business. These are other different sections which not every annual report might have, but given a company like HUL, you'll find a lot of these disclosures, a lot of different aspects, social things that the companies are involved into. So these are different segments again. So let's these are the key management people. Again, you'll know about them only when once you read the annual reports. Another important section in a company's report is its director's report, which is more about a management's discussion of the business performance in the past 1 year. And if we see through the director's report for HUL, you'll again you'll again read about the performance of different segments during the year, comparison with the performance in the previous year. So you'll know which are the segments which have grown, which are the segments. For example, you see beverages segment. Last year sales was like 2309 rupees crore, and this year it was like 2577, so grown very marginally. And for example, exports, chemical, water, the revenues have fallen. So again, a snapshot of the performance of the past 1 year, how the company did, and a management discussion on the economy, the segments, what is driving the segments, what are the challenges the companies are facing across different segments. So these are some things which are very important for you to know as an investor, and you can know this only when you read the annual report of a company. Now let's straight away jump to the financial statements of the company, which are the most important segments in annual report. Financial statements are basically, there are three kind of financial statements. First is the balance sheet, which shows which is a statement of the assets and liabilities. What's the asset that the company owns, and what are the liabilities that the company owe during that at the end of that particular year. So you won't find a balance sheet for a particular year. A balance sheet is always at the end of this year, right? So it's a cumulative statement of your assets and liabilities at the end of a particular year. So there are different segments of balance sheet again, but basically broadly there are two segments. Actually, there are three segments. The first is the asset. The second is the liabilities, which are other liabilities, and the third is the shareholders funds. So your assets is basically your shareholders funds plus all the other current and non-current liabilities. Generally, you will find only two breakdowns, which is like liabilities and assets. But for better understanding, you have three sections, which is like assets, which is equals to your non-current and current liabilities plus your shareholders funds, right? And since it's a balance sheet, it has to balance. That's the reason you'll find the total of liabilities and shareholders funds is equal to the total of assets. So of course we'll get down into deeper analysis of these numbers in the future, but just to tell you, balance sheet is one of the most important financial statement out of the three in a company's annual report, which you should not miss. Really read out properly, because it gives a very important picture about a company's performance. The second important statement, of course, is also known as a profit and loss account or a statement of profit and loss. It gives you how much revenue a company earned. For example, during this current year, the HUL earned 23,181 crore rupees as sales. So it is the amount of product it has sold during this current year compared to the previous year. and statement of profit and loss account is for that particular year. Like balance sheet is at the end of a year, your P&L account is for that current year. So every year your P&L account starts from zero, right? So you will get a statement of revenues, you'll get how much the company spent on different segments, on different materials, employees, finance, interest costs, and everything. And you will ultimately get down to how much company paid as taxes, and finally what was the net profit for the year after paying down every expenses and taxes. So again, a very important picture. You get to know that the company has been able to grow its profits during the year from 2305 crore to 2691 crore. So that's important for you to know that your company is in which you own a share is growing its profits. The third and a very important statement again is the cash flow statement. Profit is different from cash flow, and we'll understand it later. Cash flow statement shows what is the amount of cash which comes into the company during that year and what is the amount of cash which goes out from the company during the year. So again, this statement talks about different ways the cash comes in, the different ways the cash goes out during that year. Uh, Apart from these financial statement, as I said, if you read financial statements, you'll be better than 98% of investors. But if you also read the notes to the financial statement, which are like better explanations of financial statement, you'll be better than 99% of most investors. So it's also important to read the notes, and notes will like the breakdown of each and every segment of the financial statement. For example, in P&L account, we read the revenues from operation. We saw something like as number 26, note number 26. So that note number 26 will give you a better explanation of what this revenue figure is like. So let's go to say note number 26. Just a second. Yeah. So here are we, revenue from operation, note number 26. It tells you that out of total revenues, this much amount is actually sales of products, and this much money the company earned from other sources like income from services rendered to group companies and income from scrap sales. And this is the reduction in excise duty which the company paid to the government, and this is the net sales for the year. And again, so you can read different notes and see the breakdown of different aspects of P&L and account, what makes all these numbers relevant. In sales of products, again, there's something called as refer to note 37. Now it's directing us to another note in the same table. So let's go to note number 37, and this note tells you again what is the share of different products in total sales. And this is very important because you should know what is the company that you are investing is earning its money from mainly. You may say, I love HUL's ice cream and I love its brand, that's the reason I should go and buy the stock. But then you see that HUL's ice cream business and dessert business is only less than 2% of the company's sales, which doesn't really make a meaningful impact on the business. So that's not really a reason to buy the stock. But if you say, I love company's personal products and soaps and detergents, then of course it makes sense because these are like 50% of the company's total sales. So you'll get to know all these things, and I'm again repeating myself, you get to know all these important aspects about a company only when you read an annual report. Being a consumer is another thing, and you can love a product or a company, but when it comes to being an investor, it's very important to read annual reports. Again here, there's a table which shows the raw material consumed by a company, and you know which kind of raw material the company consumes in a year. So again, a breakdown, all these numbers are there in a company's annual report. So just to repeat again, there are a few important sections that you must not miss in a annual report, and you must read if you want to get a better understanding of the company you are investing in. Because after all, as I said, when you are buying a share, you are actually buying a stake in that company. So you should read the financial statements, and we'll see in subsequent videos how really you should go about reading different aspects of financial statements and how do you make sense of the financial statements. So financial statements are one area which you should not miss in an annual report. The second, of course, is the financial highlights, which can give you a snapshot of the company's past performance, 10 years or sometimes even 20 years performance. You should not miss the chairman's letter because it really gives a perspective of what the the leading manager of the company is thinking about the business. And you should not really miss the company's director's report, which again is more about management's discussion analysis of the company. So these were the sections that you should really read and concentrate in an annual report. And believe me, reading an annual report, these important sections does not take more than say 1 hour. If you are starting out, and once you are like professionally reading an annual report, it doesn't take more than 15-20 minutes to really judge what the management is looking to say where the company is heading, and what are the indications that the financial statements are giving you. So with this, I end this first classroom session of the importance of annual report and why you should read a company's annual report if you are really looking to own the share rather than just being a temporary buyer of the stock. So read the annual reports, very important. uh, and uh, and in the subsequent videos we'll look at different aspects of annual reports, especially the financial statements, and how do we make sense of the balance sheet, the profit and loss account, the cash flow statement. Thank you. Have a good day.